Good morning. We are back live trading for day 2 here at the SurgeTrader pit in Naples, Florida with global trading experts Kathy Lean and Boris Schlossberg from BK Forex. Our January contest is heating up and you guys are doing a great job. I'm going to kick it over to Kathy and Boris, who are going to give you a breakdown from their trades yesterday and then get into the New York session.
So, we had a couple positions that we were floating overnight. We had which had a zip sell signal. And the third chart was also Aussie Kiwi again. And I want to talk about this briefly. So, in yesterday's live stream, we talked about thinking about what, the general dynamic of the market is. And going into the New York session, the one highlight for me was the fact that U.S. yields, you look at this upper right-hand corner, was up at the time about 1.5%. So dollar yen was powering higher. And so my bias that I formed at the start of the New York session was that I wanted to go long U.S. dollars, because when we have such a strong move in U.S. yields, which is anything above 1%, that should be a signal to you of one of two things. One, you either want to be looking to buy a U.S. dollar, or if you see a setup that tells you should be selling U.S. dollars, don't take the trade. Don't take the trade. So, in general, what you want to do is at the start of the New York session, you want to basically be going long U.S. dollars. And that's why I was so intrigued by this Aussie dollar trade. And so we did sell this US Aussie dollar. I sold Aussie dollars at 69.33. That's what I posted in our BK room. And you can see that in that chart stamp that I sent you as well. So, once again, today, we have no idea whether it's going to be a generous day, a big flow day, or it's going to be a conservative day. But still, it was enough to hit our first target of 69.13. And now and at the time, we had 2 double zip sell signals, which I love to see. Now we have 3 double zip sell signals. We're kind of moving out of our trading period, so profits should be taken. And today's Friday, so you kind of want to move on from that. We also sold Aussie CAD. Aussie CAD. The reason why I like this trade, aside from the weak Australian jobs number that creates the backdrop of why we want to be short Australian dollars, I also thought that the Canadian retail sales number was going to be better because we had such strong job growth in Canada the last month. It was mixed, so traders weren't very impressed, but still, you know, it was enough. You know, we had gotten in at 93, I think 25, and you know, it was enough to give us some very modest profits in Aussie CAD, and we're at break even in Aussie CAD. The last one was Aussie Kiwi. Aussie Kiwi also just hit our target of 1.0779, and you know that's also enough because we had, by the time I woke up in the New York session, I posted the trade. We were right here, so we had 1, 2, 3, 4 zip sell signals, and you know how much I love my confirmation signals. So we had sold at 107, I think it was 108 pretty much. And then, profit target was 107.79, and that, ended up hitting profit target as well. Today's trades were, more slower movers than the overnight trades, which, is typically the case with New York session trades. But what this goes to show you is just how powerful these zip indicators can be, and how they do give you kind of clear signals of when you should buy or sell. But that's not the only piece of the puzzle, because you want to take into consideration where the data is, where yields are, to make sure you take the right trades. And you need to do what we did today and yesterday, which is have a first target and a second target. Because sometimes the market is a lot of momentum, it's very generous and gives us a lot of profits. Sometimes it doesn't, and that's why we have to trade defensively and protect ourselves so that we can keep our profits and keep trading another day. So, the last thing I want to point out before I shift it over to Boris is last night we zeroed in on long euros. This morning, the only trades I took was short Aussies. And that's really sometimes the key, which is trying to figure out what is going to be the one currency that's going to perform the best for you. And a lot of times that's just watching the price action and seeing, at the start of the New York session, Aussie was one of the weaker currencies. And, we did have the backdrop of the softer data, but that, was really one I zeroed in on. We focused on Aussie. We went short Aussies in a couple different pairs and made money yesterday and made money this morning. So, hopefully you've enjoyed those trades. I posted them very early this morning into the contest chat room. And I'll continue to post every day examples of zip trades that really fit our strategy, so that you too can learn how to use the indicator for your own trading every day. So now, Boris, go ahead.
Hey. Well, good morning, guys. It's really always nice to wake up to money. I left you last night with a short US 30. I left you last night with short NASDAQ. Both trades banged on the first try, plus 70 points. Really sweet. Here's my account. You can see the P&L happened last night, right? Last two trades. Go back to the most recent trades. Boom, boom, boom. Right here. Money. Always really sweet. But what I really want to talk to you today about before we start the session, and are we sharing my chart? Is it looking good? Are we able to see my chart? Screen's not sharing. You know why? I think, okay. Kate, take it for a second.
Live streams always have, live excitement. So, what I'm looking at right now, for those of you that have loaded up your zip charts, is we actually have a zip sell signal in Eurodollar. So, tempting as it may be to trade this setup right now, when it comes to zip, it's really important to understand the time that where momentum is the strongest, and it's good to trade zip. So I typically trade zip from 6 a.m. New York time to 9 a.m. New York time. So I'm looking at my watch right now. It's 9:15. So as tempting as this may be, I'm not going to take the Eurodollar zip setup. Now, in general, typically when we have Fridays, we always advise
is optimized for this time of the day. So great, we got my screens back up. Our most important part. Now, as I was showing you before, money in the bank right over here from last night's trades. But I want to step back. We got about 12 minutes before the New York Open starts. We'll set you guys up for the trade. But I want to step back for a second and explain to you why what Kathy and I do works over and over and over again. Because if you understand the philosophy and you understand the principle of our trading, it's going to make everything we do that much easier to do. The basic thesis of what we do is that momentum works as long as you select the right time of the day, the right instrument, and the right structure. Momentum always works in the end. Trading ultimately is always about, there's basically only two trades in trading: reversal and momentum. And when you know what is the best time to trade momentum, what is the best time to trade reversal, you've solved 95% of the puzzle. After that, whether you're trading bounce, whether you're trading zip, whether you're trading variations of our strategies, whether you're trading swing trading or whether you're day trading, those are all just different flavors of the same idea. And that's what's so really important to understand. When you're starting your trading journey right now and you're having a good time and you're enjoying the contest and you really want to go into this SurgeTrader eval so that you then can pass the eval and then be able to be a trader for life and have the opportunity to make income. Those are the fundamental ideas that you need to get very, very comfortable with, because 99% of traders out there do not really appreciate those ideas, don't really understand the thesis behind momentum, and really don't know how to trade it. And that's why 99% of traders out there lose money, whereas surge traders win money. So I want to first and foremost explain to you, this is why we have such really easy to understand indicators. You can see momentum intuitively. You can see it visually in our charts. You see the red momentum, which is telling you that it's down momentum. You see the green momentum telling you it's counter momentum or it's up momentum. It's all instant and understandable, right? And that is what makes our trading so powerful. So having spoken about momentum, let's talk about reversal, because what we did last night was our reversal trade. Asia session trade for me is, simply put, reversal trade. I sell tops, I buy bottoms, and I wake up in the morning and I bang my profits. So let's just take a look at what we did last night. I'm going to go back to when we laid the trade out. This is New York hours over here on the bottom over here that you're watching me. I'm actually going to go into the replay mode because we want the price action to look the way it did the time we put the trades on, which was like, I think it was we started broadcasting around 7:30 last night. No, I want to go back over here. And I'm going to go into the replay mode in TradingView. This is what's so really, really cool about TradingView. As you can see, let me just kind of stop it over here. You can see the price action in TradingView from Asia. This is the high, the midpoint, the low. We're rallying. And I said to you, we're going to hit the highs. I'm going to start looking to get short. And we're rallying. Kathy does her Euro-Yen trades, right? This is pretty much what Kathy's Euro-Yen trades are put on and her Swiss Yen trades are put on, and she's banking money. And I'm going, hey, we're hitting highs here. We're hitting highs. But as I said to you, it's not enough for us to just guess the highs. We want the market to show us that the highs are probably made for this part of the session. So we let this thing float until we hit the red mark. Momentum changed from the high green to momentum red. Once we got short over here, we laid the trade down, and all we had to do was just simply, fold our arms and watch it unfold. Now, it takes a long time in Asia. It's not like a 10-minute trade. Sometimes it can be a 2-3 hour trade, but generally it resolves in just one attempt. So we got short 62s, as I said to you. The target was 22s. Let's see exactly what time of the night it hit in the Dow. You see, and that's the beautiful thing. I love doing this because I don't care. I'm asleep. I'm letting the market do the work for me, letting it take me to profit. And as I said, I stay with this trade, do or die, until it hits profit or stops me out. So it's just, meandering, because that's Asia. Everybody's trying to just, adjust. But remember, dealers want to run the stops from the bottom. They want to run the stops from the top. So, we come back up. It actually takes me a little deeper into the money. One of the great things about it, by the way, about sleeping through your trades is you really don't stress out about anything that goes on. What did it pop up? What happened here? It popped up on the second one, and then it came down on the second one and dropped like a stone over here, and took me into the profit right over here. You can see the big drop into the 50s over here. So that was the U.S. Trade. Let me go through the Nasdaq trade last night, which will start again at the same time. I'm going to go into replay mode, like right over here. Let me just get the replay mode going. Right over here. There we go. And so same kind of a story. We sold the highs, and I just hung in there until it hit the bottoms, right? Just letting it go. See, it starts dropping like a stone. I think it was probably like somewhere around over here. I forget what the numbers were because I was asleep at that point. Where the trade hit. The bottom line is both trades hit really nicely, and the reversal trade worked super easy. And as I said to you last night, the most important thing is to not quit on your trade. Even if it didn't work on the first try, it would have worked on the second try. Asia trades almost always resolve, there's always risk in the market, but almost always resolve within 1, 2, or 3 attempts. And as long as you stick to the strategy, you are very much assured to wake up like I did to profits this morning, which is awesome, right? Which is really a lot of fun and really, really nice and easy. Now, however, as we enter the New York session, everybody is ready for flow, because now New York is all about directionality, right? So before we kind of examine where New York is, let's take a look at the calendar, and let's just see what data flow came out last night, if it's going to have any kind of material impact on us. We actually don't have any data flow today. Today is, as you can see,
we have existing home sales at 10.
Right, which is, like I said, we have no real data flow. I mean, it's existing home sales. For Kathy, that's an important event. For me, I could care less. No, I'm just kidding. The point is that there isn't any significantly market moving flow, although existing home coming in very negative could have a small blip on us. We have Harker talking, the big tug of war in the market right now is between two primary concepts. Is the Fed going to continue to strangle the economy by raising rates by 50 basis points, or is it finally going to take its foot off the throat of the U.S. consumer and actually just go to 25 basis points, which they should? We've seen a very, very sharp drop-off in underlying inflation pressures. We've seen a definitely sharp drop-off in consumer demand. So it would make most intelligent sense for the Fed to start easing up. Now, on the same time, the problem is it may be too little too late, because the market now may be coming to the conclusion that the Fed kind of strangled the economy too hard. And despite the fact that we have very, very strong labor demand in the economy, the actual demand is relatively weak, and it could chip us into a recession. So that means that's going to be weaker for earnings, and obviously going to have some kind of an impact on stocks. Today we have some kind of actually interesting counter flows going on in the marketplace, because if you look at the actual positioning, Nasdaq, which is the most volatile and the highest beta instrument we have, is actually up 40 basis points against a US 10-year that's up 2%. So usually, remember the key thing about Nasdaq loves free money. So the cheaper the money, because Nasdaq is technology companies basically have pure profits. So if they have access to cheap money, they have ability to print more profit. However, if money gets expensive, the cost of capital becomes expensive. That really, really compresses their price earnings ratios. The biggest issue with high interest rates for NASDAQ stocks like Microsoft and Google and Apple and everything else is, it's not that their businesses are bad, it's just that we're going to pay much less for it. Because if I get 5% from a 10-year yield guaranteed, I'm not going to pay 30 times earnings. I'm only going to pay 20 times earnings. So even if my earnings are better, my multiple compresses, that kills my gains in NASDAQ. That's basically all of the mechanics. That's all the fancy language that you hear on CNBC and Bloomberg compressed into one idea. The more expensive the money, the lower the price earnings ratio, the tougher it is for NASDAQ. But today we have expensive money and NASDAQ kind of rallying, and that's just simply, I think, a function of positioning and the fact that it's oversold. But going into the New York session, which is going to pop, the New York Open is going to pop in 2 minutes, and we're watching it, from the corner of our eye here. This is the US 30. Here's the thing that we begin to focus on. At around 5 o'clock New York, right, 5 a.m. New York, this is the European Open. We switch our whole orientation from reversal mode into momentum mode, right? We go from bounce counter trend to bounce trend. And as you can see with my bounce indicator over here, it actually will tell you, will start printing trend-based trades, right? Bounce is defaulted to a trend-based posture. So in this case, look at how many trend-based trades it picked up. The trend-based trades, just to sort of review, actually there's even more. There was so many good opportunities. Let me explain to you the basic ideology behind our trend-based structure on the chart. I already told you that this is the dynamically generated session high, dynamically generated session low, and the middle ground, right? So if we're in the upper end of the range, middle to the high, that's like being in the attacking part of the field, right? Those of you who play American football or European football, we're attacking the field. And you know that when you're in the opponent's field, you're going to score a goal. So we want to be long. We want to be absolutely long only in the upper end of the field, right? When you're on the bottom end of the field, you're going the other way. So you want to be short. The shorts are the dominance. The longs are the dominance over here. This is like, this is like Man United if you're from Europe or anywhere else, and Holland is playing for you. You want to play with Holland all the time, or you want to play with, I don't know. I don't follow American football that much anymore, so I guess I can't use Tom Brady because he's not the GOAT anymore. But whoever is the GOAT in American football right now, you want to be playing with him. That's the whole idea. You want to be on the side of strength. If the strength is buying, then you want to be on the side of buying. If the strength is selling, you want to be on the side of selling. It's a very, very simple concept, but look how well it works. Look how much money it would have banked for you this morning. So the first trade, around 5 o'clock, 4:30, European Open, we're underneath the midpoint. We sell here 39s, closes out for 99s plus 40 points, right? A little bit of a retrace. Remember, our whole methodology is price has to go green, then has to go red. When it goes red, we get short. As long as it doesn't breach the midpoint, we are biased short, right? So second trade in a row, winning trade. Third trade over here in the row clips us out. It's fine. That's, you're not going to get every single trade winning trade. Fourth trade over here comes back. We're underneath the midpoint, a little bit of a green and a red in here. Boom, make money. And here's the final sell over here in front of the U.S. Open. Now, this is a perfect example of using Kathy's common sense. We do not trade. You notice that I haven't put on any trades. I haven't said, oh, we're going to do this, because from 8:30 to 9:30, you do not want to be taking signals, because they're going to be essentially almost always fake out signals. They're going to take you one way just to set you up the other way. So over here, they took you to the downside just because they knew the market open is going to just rip open like a like a beach ball underwater, right? So they popped it up, and that's why I stood back. But this whole session before 8:30 was a beautiful, beautiful momentum session. Now, market open, we got the first 5 minutes. I let everybody do their MMA fighting with each other. I'll let the bulls and the bears wrestle, and then we're gonna just basically watch and see what's really happening. What's really happening now that's very, very clear is U.S. equities are dropping. We are in this sell territory. We have a red zone, and the natural trade right now, is to set up a bounce short, which is what I'm actually going to do on my computer here. Let me see if I can find my sessions here. Yeah, I'm going to set up my bounce short trend. into the sell mode on the US 30 and do the same thing on NASDAQ. And what's going to be cool about this, okay, I set this up. Let me just make sure all my buttons are clicked. Okay. What's going to be cool about this is if my, if I'm right, you know, in other words, if the prices fall like a stone right now, rally a little bit, and then begin to fall again, that's going to put me into a trade. The great thing is I do not trade until all my rules are met. And the beautiful thing about me using my algo is that, you know, the algo just implements all my rules, so I'm not sort of a slave to the, you know, to the chart at this point. But regardless of how it's working out, I now just simply watch and wait. Now, if within the next 5 minutes, happens all the time, we start to rally back up and go back into the buy zone, I'll completely change my mind. The great thing about my approach, and by the way, oh, sorry, I wasn't watching the NASDAQ chart. The NASDAQ chart is really like problematic. It's not really a sell zone chart. It's kind of, I'm going to watch this very carefully because if the NASDAQ chart comes back up into the green zone, I'm going to change my bias back up to the upside, right? And this is very, very important. The great thing about trading is there is no buy side, there is no sell side, there's only the right side. And when you begin to realize that, when you begin to realize that your ego doesn't matter, your view of the market doesn't matter. The only thing that matters is where's the price action leading you. And you need to be absolutely open to that idea. You need to just be psychologically open to the idea that whatever you think, it's really nice for the market to validate you. You know, you have a thought, and the market is doing exactly what you think, that's great. But that is not how you make money in the market. The way you make money in the market is to watch what the market is doing and then act accordingly, right? So I'm watching the market. The great thing about my bounce indicator is it doesn't, you know, it's just telling me exactly what's happening. What's happening right now? The sellers are in control, you know? Man United, Holland, killing Liverpool over here for all the European football fans. And, you know, you know, but let's just say it's, I'm going to be completely clueless on the American football tips for you today, so my apologies. Maybe Luka Doncic from Dallas Mavericks is my new favorite basketball player of all time. Is who I want to be trading with. The point is, you want to trade with the winners. And trading with the winners changes all the time. That's the other thing is, there is no such, nobody stays a winner forever, right? The Bears don't win all the time. The Bulls don't win all the time. Your job is to figure out who's the winner right now, who's the winner this minute, right? And that's what's so cool about bounce is it just puts you on the right side of the trade and lets you work that trade out in 1, 2, 3 attempts. Ideally, of course, in the one attempt. But that's the other thing. You believe the strategy, you don't quit on the strategy, and you implement the strategy the way it's designed. And the result of it is really, really nice, steady P&L. Let me just show you just how well we've been trading. And I'll explain to you like sort of what I'm trying to do here. This is my FX account for the bounce account, right? So here it is. Let me see if I can bring it up here. Here's the strategy. I don't know if I can do it full screen, but hopefully you guys can see it. Anyways, you can see the strategy has done about 36% since May. But what is much more interesting and much more important to me is that from around the time of October, right, we more than passed the evaluation. Because remember, it's a $100,000 account, you need to make $10,000, right? But then I said, let's try and pass the SurgeTrader evaluation from 130,000 to 140,000, right? Let's just do it this way. But here's the real kicker the rule I put on myself that made it so much more. Switching. Oh, share tab instead. Okay, yes. Are you seeing my chart now? Yes. Okay, good. Oh, sorry. I was just yapping away and you guys didn't see anything. Okay, so look at this. It's a 36% gain in like 3 or 4 months, right? But what I really want you to focus on and why I think it's so valuable in terms of understanding how bounce can really help you pass the eval and then more importantly, control your live account and help keep you making money for the rest of your life is I put this incredibly strong challenge on myself. Let's take the account from 130 to 140, but try to have virtually no drawdown. Because remember, the whole idea about prop trading, and really the whole idea of trading for life, is you want to have minimal amount of loss. Profits take care of themselves as long as you learn how to control losses, right? Now, the way we control losses with my strategy is two ways. Obviously, we have hard targets, hard stops on everything. Obviously, we have very, very defined entries and exits on the strategy. But much more important, and this is maybe a little bit hard for you guys to swallow because everybody wants to, race to the finish instantaneously. We use very, very small size. We try to grow rich slowly. I basically take the Warren Buffett attitude and I apply it to trading. So it's taking us a long time, but you can see how we are crawling sure as day follows night to our target at 140. So we're going to make 10,000, 10% with I think 2% drawdown max during this whole cycle. And maybe it'll take us 2 or 3 months. It doesn't matter. The great thing, the reason why we're partners with Surge, the reason why we think Surge is the best prop trading firm in the world is because they are one of the few firms that does not have a fake time limit on your process. They say, here's your attempt. We're going to back you. You take all the time in the world you need because that's the right way of trading. That's the right way of understanding risk because what you want to be doing is not just, pass the surge eval and they get blown out in the first week of your trading because you took a huge amount of risk. You want to be having that real account for the next week, the next month, the next year, the next decade. You want to be partners with Surge for life. And so are we. And the reason why you can be is because they don't put artificial restraints on you. They have a very, very simple way of trading. It's just money. Here's your drawdown. Here's your target. Control your strategy and you will get to your target. And that's what I'm trying to show everybody when you're trading with me live. That's what I'm trying to show you guys in the contest. And the contest is fun. I mean, don't get me wrong. Go nuts in the contest. But don't be fooled that, if you make 85% of the contest, that it's going to be your first day's trade. No. The really great way of trading is to have a lifelong approach to this. And that means controlling your risk and controlling your size to much smaller than you think is actually reasonable. I mean, I'm trading really, really small. You can see how tight the P&L is, but that's just to prove the point. I mean, in real life, you could certainly expand the volatility here and give yourself bigger gains on a day-to-day basis. But that's basically the recipe that nobody tells you. That's the secret to success. It's just being very, very cautious and small in your size. It's 95% of the game. So let's see if we can see if my tabs are switching around. Are we switching around? No. Let me see. Share this tab instead. Got it. Okay. Cool. Okay. I'm finally learning how to use the software. So back to markets. Now, NAS in the buy zone. NAS turning green. So we got to orient ourselves back to the green side, not to the sell side. So I'm going to reset my algo. That's what I wanted to show you is that you have to be very flexible in your approach. I'm going to reset my algo on NAS to the other side. And we're going to just simply wait very cautiously. And now we're going to put ourselves into the buy mode on the NASDAQ. Now, switching around to the US 30 and seeing where that's at, that's just, trading the bottom, right? So we have the right orientation. We're going to be sell to the market in the US 30. We're going to be buy to the market in NASDAQ. And that seems so counterintuitive because, wouldn't you want to be on this, wouldn't you want to be long? It's equity market. But no, if you've noticed the last couple of days, last couple of weeks, NASDAQ goes one way, the Dow goes the other way all the time. And you need to be able to read the market price action and understand exactly that this dynamic can actually occur. Yes, two very, very similar instruments can take two completely different directions. If you are open to that, you can make money both ways. And we have done that, many, many times. So we're sitting here kind of just, patiently waiting for our setup to occur. This is the other very, very important part. Kathy has emphasized this so much in FX, and it's the same rule everywhere, basically. You don't jump the gun. If the setup isn't there, you don't trade it. You don't trade it. You just, you let the price action come to you. You don't go to the price action. And if there's nothing to be done, there's nothing to be done. We're just going to wait and see until the price action kind of gives us the proper setup. For now, the NASDAQ is turning positive, which is, kind of interesting. And if we have a little bit of a sell-off and we get positive again, we're probably going to go to the highs of the day. The way the market is trading, and I'm happy to give you my analysis. Sometimes I'm really, really on the money, but sometimes usually means like, if those guys are trading me in the room, it's like 70% of the time, right? The other 30% of the time, I have like a good feel of the market and I could be completely wrong. I don't know, you don't know, nobody knows where the next flow is going to come from. All we know right now is we're looking at the chart is that the flow in NASDAQ is positive. That's the way we're going to bet, right? Who was it? One of the old sports writers used to say, sometimes the race doesn't always go to the swiftest, and the ring doesn't always go to the strongest, but that's the way to bet. That is really the way to bet. We bet with probabilities. We bet with a higher edge and let that edge take us to profit. So I'm going to sit here patiently, wait for my setups to occur. We're trading NASDAQ with a 30 target, 30 stop. We're trading the Dow with a 40 target, 40 stop. As you can see, my read of the market is pretty good. I thought NASDAQ was going to try to push to fresh highs. It's kind of doing that. But we're not going to, we're not going to flinch. We do not flinch until we get the setup. And in order for us to get the setup, we need to see a little bit of a red momentum sell off and then a green momentum resume. If we get that, that's a strong confidence signal that the buyers are in control of the price action. They want to take this whole thing higher for the rest of the day, or at least, for the time being now. And we're going to do this now, this whole continuity trade, right? When is continuity trade best? Continuity trade is best pretty much from that 5 a.m. New York time to about 11 a.m. New York. Why? Because that's effectively, if you think about it, London open to London close. And London is the bridge between North America and Asia. It's kind of like the central clearinghouse of where everybody makes their bets. And then by the time London kind of closes up for end of the day, they're all ready to go to their pubs because 11 o'clock in New York is about 4 p.m. in London. A lot of the flow kind of dies out. Now, if you're trading in the U.S. markets, are there trades from like 1300 hours, 1 p.m. New York till about 3 p.m. New York? Absolutely. Sometimes you get some really nice, good continuity trades, but again, not the optimal time. You could put some trades on there, but not the optimal time. Now, I'll tell you one other important thing. The worst time, the trap time, the time when you're going to get trapped into a bad position and you're going to have to just, nurse it forever, is from 3 o'clock New York to 4 o'clock New York. The final hour, you never know what's going to happen. And nothing, by the way, is worse than the final hour on a Friday. Because if you're on the wrong side of that trade, two things are going to happen. You're either going to just get sideswiped and you're going to be stopped. And then if you're stopped, then you have to come back into Asia after the weekend and try to reconcile that trade, try to repair that trade. And it just, it's a much bigger headache than having to just simply step away. The really great rule of thumb, Kathy pretty much stops trading 9 o'clock Friday. I stopped trading 11:30. In other words, my last trade that I'm going to put on is going to be 11:30. In fact, I'll probably say that if we get a setup, in the next 15 minutes or so, that'll be my one and only trade. I'm going to trade it until it resolves or it hits profit. And then after that, I'm pretty much going to be done for the rest of the day, because that's the right way of doing it. You don't need to be a pig. You want to come into the market and trade at the optimal time and make the optimal trades in that position. Now, while we're watching this, I get a lot of questions from many traders who like, Boris, I love trading indices, but you're a degenerate. You trade the 1 minute chart, and it's just way too much price action for me. And I agree, that bounce is the way we trade bounce in my room is for very, very special people, for people who have really zero sense of patience. So could you trade bounce on a longer term chart? And the answer is yes, and I'll show you a couple of examples of that. But before I even show you a couple of examples of that, let me also show you that bounce is very, very tradable on other instruments, and most importantly, it's very tradable on gold, which is what I know a lot of people trade. It's kind of the progression of trading in the market, in the speculative retail market, kind of goes Forex, then metals, which is gold primarily, and then indices. So a lot of people ask me, can you trade this on gold? The answer is yes. So we're going to put this on gold. I'm going to use the same tab, and then I'll come back to the indices. Right? Is this are we watching my tab? Yeah, we're seeing my tab. Okay. So what I want to show you, the key thing is with gold is you need to change your parameters, of course. You need to change your inputs. Remember, we're trading Dow with a 40 target, 40 stop, and that translates to 44,000 ticks because everything is defined into the lowest, smallest increment price. But on gold, we're trading with $1.50, which is in gold charts, that's 150 ticks. So I'm going to just put 150 on here. And over here, let's say okay. And you can see, boom, 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 boom. Thank you, ma'am. $1.50, $1.50, $1.50, right? I changed my parameters just to show you how gold would have traded over the last couple hours. Gold has been like a beautiful momentum trade. Momentum is just another word for trend, and trend is just another word for flow. It all means the exact same thing. Really, trading is super, super simple. There's only two things they can do. It can either go in the direction it started, or it can reverse direction. Everybody, from the most complicated HFTs, including Renaissance Capital, to the fastest HFTs like Citadel, to the longest value traders like Warren Buffett, are just trading one or the other thing. They're either trading reversals or they're trading continuations. So don't get intimidated by lots of fancy Wall Street talk. Trading is actually a pretty straightforward proposition. You just simply have to have the clarity of vision to understand what's going on, and complete lack of ego. You need to be open, both emotionally and mentally, to following the price. If you follow the price, and a lot of times you have an analysis that dovetails with your price, that makes it even better, you are going to be on the right side. But the hierarchy of success, in my opinion, in trading is understand what you're trading, be open to what the market is telling you, and then have the strong discipline and the structure to trade it in the way that you meant to trade it. Have the faith in your structure. Like Kathy does all three so super well. But of course, she's a discretionary trader. She trades, she analyzes, her trades are new and fresh every day because she looks at the market, looks at all the dynamics, and incorporates and synthesizes that. I am a systems trader, right? I really don't care. I'm aware of the news flow. Only my primary function is to step away from it, right? To basically understand that I don't want to be in front of it. But overall, I'm just letting the system take my trades. And as you can see, the system is very, very sound when you implement it on the right structure. Let me go back to let's just see where everything stands. I have to readjust my signals so that we know where we stand, and just catch up on what's going on in the market right now. So, hey, I was yapping away, and there was a sell signal, 986. We're actually in trade. Let me see if we're in trade in my account. Where's my account? Let me share my account. Share this tab instead. Oh, it didn't trigger on my account for some reason. Growing pains of because I had to. Let me see why it didn't trigger in my account. Let's go see. Trend buy. Trend sell. When is trigger? Huh. Interesting. Okay, I'll have to figure out why my algo did not trigger. But that is a legitimate trigger sell here. I had to, apart from everything else, which is the beauty of technology, my whole cloud structure crashed last night, so I had to reconstruct all of my algos in the cloud, and I think probably I didn't set them up properly. But regardless, my strategy, which is what I really, really care about, because I say this to you all the time, one single trade, couldn't care less. 10 single trades, couldn't care less. 100 trades, I couldn't care less.
You have to share the screen.
Oh, am I share this tab? Okay, sorry. Yeah, there we go. I don't care about any single trade idea. What I care about is the soundness of my strategy. As you can see, the strategy is very sound. We're short here 86s, right? Our target would be 46. I think we just missed it, literally just missed it. Now, those of you who are going to ask me, Boris, why don't you take an early profit? Why don't you take like a 30 pip profit, or even like a 38 pip profit, or stuff like that? And my answer to that is, it's really tempting. It's really, really tempting. It's tempting to take the money now. And if you're following me, you certainly could take money if you want to do it on a discretionary basis. But I am a systematic trader. I do or die. I believe in my strategy, and if I stick to my strategy, my overall P&L, my overall probability ratios, my overall structure in the end is going to be proven right. The irony of the whole thing is there's enormous amount of intellectual capital, mathematical calculations, and lots of scientific programming that goes on behind it. But ultimately, everything rests on faith. It's the most human of all emotions. You have to have faith in your strategy if you want it to be successful. So that's very, very important. As you can see right now, I'm short 86s. I need to see 46s coming in 54. It's going to do this. We have a very famous saying, a boiled pot, a watch pot never boils. We always say a watch chart never TPs. So I usually always like to, not look at the chart. But I'm going to stay with you. Let's see if the trade comes in and hits me down to the 46s. It's going to tease. This is Dow.
Is there any trade in NASDAQ?
There's no trades in NASDAQ. I think I would have to. I'm going to switch to NASDAQ just to see. No, there's no trades in NASDAQ because NASDAQ is still green. We need to see NASDAQ go red and then reestablish a green. So there's still no trade in NASDAQ. But maybe you took my attention off and we finally hit. Maybe not. No, I'm just waiting. I need to see this candle. There we go. Thank you, Kay. Kay is always my good luck charm.
So if, just because I'm following this, and if you are just kind of getting a sense and learning about Boris's strategy for the first time, what he was saying is that first you had this NASDAQ in this red zone with a red background.
Yeah,
then he wanted the background to turn green and then turn back to red. Can you go to US 30 first?
Sure.
He was looking for the, if you can zoom in a little bit more.
Are you talking about the US 30? Because you're talking about NASDAQ.
Whatever you're on
this
now.
This is US 30. This is not NASDAQ.
Yes. So we were started off with the background being red.
Right.
He waited for the background to turn green.
Right.
And then he wanted to turn red again.
Correct.
And that's when we got the sell signal.
Right.
If you go back to the NASDAQ, the other chart, that did not happen. Even though we're watching all these lines in these charts, the background was the green the whole time. So, what he needed to see to trigger that signal is for the background to turn red and then green again, right?
Yes.
So just to explain for those of you that are following along like me, who are not always trading the US 30, that's what, he was trying to tell us in so many words.
Exactly. Kathy always yells at me because I basically sit all day long with my group of degenerates in my day trading room, who all have been hanging out with me forever. We all know exactly what's happening. I speak in shorthand all the time, so my apologies. I really try to be as user-friendly as possible, but that's there's always a limit to my ability to do that, and Kay is very good at correcting me. And yes, that's basically what what we're trying to explain. So just to sort of show you, to annotate this on the chart, if you guys want to see it. So here's what we have. We have the first red condition, right? Then we have the green condition, right? The retrace mode. So to put this into sort of I like to create all sorts of little memorization techniques. The bottom line for what we do is it's called don't chase retrace, right? We trade momentum, we trade strength, but we don't chase it. Don't chase retrace. If we're selling over here, we're chasing it. But here we got the retrace, and then once we get the retrace and it confirms that we're going to be short again right over here, my signal pops up, the indicator pops up the signal, and boom, we're done. And then you just have to have, the cojones to hold until it hits target.
I mean, in reality, it was 10 minutes for us.
10 minutes.
That long.
10 minutes is a lifetime in our. This
you got your coffee, chatted a little bit. It's 10 minutes.
Exactly. But for those of you guys who day trade with me and we're doing 5-10 trades of these a day, we like to resolve them really fast. And this, by the way, this is why I absolutely love the Asia session trade, because the Asia session trade forces me not to watch the chart. It forces me to just simply put it on and then go to sleep. And I'm not troubled. I'm just not troubled. If I had to watch that, tick by tick movement through Asia, I would go nuts. Because Kathy knows I have Nope. There's like people who have some patience. There are people who have lots of patience. I have no patience. I will walk into a restaurant, and if they tell me it's a 5-minute wait, I don't care if it's she loves food. You know, she'll be very, very comfortable waiting for an hour. I will leave. I will go to McDonald's. I'd rather eat McDonald's than wait for the best restaurant in the world for more than 5 minutes. So if you're that kind of personality, yes, it's a little hard. But you know, most of you guys are much more reasonable than me. But I created the strategy, of course, you know, for my hyper idea. So one last thing before, yeah, go ahead.
So a couple other things. You know, first off, this is a trading robot. So you could have just walked away and grabbed coffee and relaxed and just let it fulfill itself and hit profit target.
Correct.
Another great thing about this is that this is appointment trading. You know, you saw we waited till 9:30. You know, you can go about, do whatever it is that you do during the day. You know that, you know, start trading with Boris between 9:30 to 10:30 New York time. And so 9:30, you come into the market, you know, you wait for the setup, and then you take the trade, and, you know, pretty much he's done by 10:30.
Yeah.
So if you like putting in your diary, in your calendar, you know, when you want to trade and a specific time of day every day, then trading live with Boris is exactly right for you. And so for those of you that are Surge contest participants, you know, you can trade live with Boris every day. So make sure you get that link, which we actually put onto the Discord every day we trade.
Yes.
Get on it, and you will be able to do this with him, not just today, but every day.
Right.
Also on Mondays, Boris and I both give a general market outlook webinar. So we'll be sharing with you a link on the general market outlook webinar as well. And since you're on camera, you can talk a little bit more about that.
Yeah, so, you know, we, every Monday, actually, we have a great webinar. Tuesday through Friday, I trade live. Separate link, we post it in the contest. We email it to you. Be sure you register. Once you register, you're going to be in our email flow. You're going to get all the information, and you're going to be engaged fully. And then we also will send you end of the day and beginning of the day reviews of the trades that we took, so you really begin to understand and internalize the way we trade, and it can help you with your own trading. But on Monday, we have a special webinar where we kind of preview the week ahead, and Kathy goes through the whole economic calendar, kind of explains to you where the important dates are, the important conversations, the important news releases are, what's happening as far as the charts go, and just her whole macro overview. And then, you know, then I'll take you into a little bit of New York Open trading on Monday. So it's a very special webinar. We asked, you know, we're going to put the link into the Discord. If you're in the contest, be sure to join us there. Now, the very good thing about all this, by the way, is I know you all have a real life. I know you have kids, you have school, you have work, and sometimes you can't attend it. As long as you register for any of these webinars, I will send you a video replay every single day, so that you can watch it in the comfort of your own time. You can watch it at night. You can watch it. A lot of people watch my live trading on review, because, you know, it's like watching game film. You really learn. You get to see in real time. I trade, as you can see right now, I trade everything live in real price action, real numbers. There's no hiding from us, and it really helps you to understand and also get comfortable with the strategies that we trade, and then internalize them yourselves. So that's very, very important. And I hope everybody comes in to join us on all that. Additionally, when you come in and register, I will email you full access to my actual account. You get to see all of my trades as they are taken live, you know, in real time. You can watch this. By the way, this is a desktop version, but of course, the really easy way of following it is on your phone. If you just simply put MetaTrader 5 on your phone, I give you all the logins, I give you all the passwords, and you can literally see my positions. That's also very helpful to a lot of people to kind of understand. To kind of understand what it is that that I'm trading. And as you can see, here's the history of my, history of my P&L, and it's, you know, it's small. This is the beautiful thing. Small money adds up to big wealth if you kind of follow my methodology, and I think that's what you get to see when you see my trades live. And of course, you don't have to be as tiny as I am. You can trade bigger, but the principle is what I really want to teach you. Everybody trades uniquely. Everybody adopts my strategy and Kathy's strategy to their own style, to their own approach, their own methods. You know, that's the success we want to teach you. But we want to give you the tools to make you personally a successful trader. And I hope you guys really enjoyed today's live trade. It's been unbelievably fun to be here in the pit with SurgeTrader. Technical snafus notwithstanding, the real great part is we made money, we showed you the good stuff, we traded the markets. That's really what it's all about, and I hope you guys really, really, really enjoyed it. Okay, are we're done for the day? I think we are, because as I said to you, these are the final trades I'm going to do. We're going to hop on a plane back to New York. Be sure we're going to send you all the follow-up information. Be sure to register if you haven't yet already, and we start everything fresh next week with us in our New York trading rooms, and we'll see you guys there. Thank you so much. Thank you, Serge, for having us and hosting us, and we'll see everybody on Monday. Everybody take care.
Thank you. See you later.